Alrighty, good morning all. Let's hop in and talk about 10 of the trending crypto news articles. Hope you all got your big old cups of coffee, because we got a longer one today, I feel. First off, thanks to all those who have liked, commented, subscribed, or are listening over on the podcast. I really do appreciate it. It gives me good energy in the morning. I enjoy doing this for y'all. That being said, links to everything talked about are down in the descriptions of the appropriate videos. So yeah, let's jump in, talk about article number 1, Polkadot. It's officially in the mainnet. Woo! It is now fully decentralized and permissionless after a decision passed by the community government to remove their admin rights enjoyed by the Web3 Foundation, who were the developers, stewards, and shepherds of this very young crypto project. So the governance proposal to remove special admin privileges was enacted around 8 a.m. UTC on 21st of July, which signaled the true launch of Polkadot. While being live since late May, it began its life as a permissioned proof of authority network. The Web3 Foundation both validated the network and had special access to intervene on the blockchain if a crisis occurred. Not something you want for a long-term growth, which is why I'm glad they got rid of it, but it makes sense. Web3, had these measures enacted to lower the damage from potential catastrophic security breaches and bugs in a newly launched network. Over time, validation was decentralized to the community via a proof-of-stake system, which currently employs over half of the DOT tokens in circulation through 197 validators. So looks like it's pretty decentralized at this point. 197 different validators is not too shabby, particularly for a young crypto that is still growing. And this government system was actually what was used to remove admin access in what was called a nicely poetic ending. However, the procedure was also required from a practical perspective to test the governance system one last time. With the vote, Polkadot struck off the CC1 tag, standing for Chain Candidate Number 1, from its mainnet. This signaled the beginning of a true mainnet for the smart contract platform. Yep, officially, Polkadot is in the hands of its community. It's a pretty auspicious day, one that does not come around very often. Happens once in a crypto's life, ideally. So good for them. So yeah, Polkadot allows it to, the modularity of it allows it to attract both developers from other smart contract platforms like Ethereum and those from more traditional backgrounds. It uses WebAssembly for its virtual machine, which accepts Web 2 programming language like Rust and C++ to code dApps. Frameworks to deploy decentralized apps and Solidity, Ethereum's programming language, are also being developed. Pretty decent. There's also a lot of different things they're doing. Congrats to Polkadot and the Polkadot community. This is more of a feel-good story, watching another new crypto come up, start out, and finally achieve its mainnet success. Wish nothing but the best for them. And hey, yeah, we're going to move on to article number 2, but good for them. Alrighty, so Binance is launching ChainLink quarterly futures before Ethereum's. Interesting. The crypto exchange has announced to be launching ChainLink as a quarterly futures contract. Trading of the contract will commence tomorrow, July the 22nd, at good old 7 a.m. UTC. Traders can use a maximum of 75 times leverage once the Link quarterly futures contract goes live. The quarterly contract will expire September the 25th of 2020. Good for them. Good for them. So the fact that stands out is, of course, that this quarterly contract has been launched before an Ethereum one on the exchange. Though as the time of writing, there are quarterly contracts for two others, Bitcoin and Cardano. So Cardano was even launched before Ethereum, which actually begs the question to me, why haven't they launched Ethereum yet? What are they waiting on? Kind of curious. But the popularity of ChainLink amongst crypto traders could be seen as one reason. Link's daily trade volume briefly eclipsed that of Ethereum, particularly around the time ChainLink hit the new all-time high value of $8.92. What a day that was. So yeah, it's Links had this weird malicious report published by this Zeus Capital place. They've since taken it down, but it predicted that Chainlink's value in the crypto markets would eventually fall by 99% to 7 cents. Crypto Twitter's been pretty heavily debunking the report, which has been pulled down from the website. And as of the time that this article is written, and I've been seeing around quite a lot, people are putting rumors and blame on the Nexo project. For the very least, some of their staff's involvement in attempting to negatively impact the price of Link. I like Nexo as a thing, and I do hold some Nexo, so I'm not exactly happy about this myself. I'm assuming it was some employees with Nexo versus the company itself. But still, not a great look, but good on ChainLink. They're getting futures launched. I'm very interested to know what Binance considers their criteria to be for these launches. Why we don't have Ethereum, why we don't have Ripple, why we don't have Bitcoin Cash or like any of the others, but we do have Bitcoin and Cardano. So, yeah, it's just something I'm curious about. But, no, we'll see what happens. Good on you, Link Marines. All right, hopping over to number 3, VeChain popping back up. The largest Italian agricultural association and the largest tomato processing company in the country of Italy rely on VeChain's blockchain technology to make the tomato supply chain traceable. What? This is the type of news I like to see, and VeChain has had a lot of it lately. So according to a local media report, the association and the company have signed an annual contract as part of a 3-year supply chain agreement to support the Made in Italy quality label by promoting quality and national origin. Among various initiatives, the Farmers Association and the company are developing a digital platform based on the VeChain Thor blockchain. In case you're unaware, VeChain is also partnered with Walmart or Sam's Club in China, Nike for a specific shoe, as well as a couple other COVID-19 research firms, all to track data via the blockchain. Track the status of COVID testing and store those results. Track Nikes to eliminate potential counterfeit shoes hitting the market and you way overpaying for them. And Walmart or Sam's Club for its supply chain to do the same thing. So VeChain is definitely growing in this space as they continue to announce more and more new projects and products. This one has been in the development phase for over a year and a half and has involved some 300 companies, 17 cooperatives, and 6 producer associations that will use the VeChain-based blockchain platform to track deliveries. And farmers were trained in the use of the platform and the insertion of production data on the VeChain blockchain during this downtime that we've all had during COVID-19. In fact, 3 million quintals of tomatoes pass through the Prince's factory every year. Dear Lord, that's a lot of tomatoes. So they're saying, it'll obviously be an experiment for the next several years, but because we'll have to perfect the blockchain with our partner VeChain. But in the meantime, the first trial convinced us that this is the right way. We pay more for the tomato and we guarantee its quality. I feel like that's going to be the big thing for VeChain's use cases in the future, being able to certify your product via the blockchain is pretty darn good. Counterfeit fish, I know, makes up like 60% of the supply, 60% or something like that of what makes it to the supermarkets. So if you like salmon, you've probably eaten fake salmon. You just probably have. Statistically, you have. Which is crazy to me. It's insane to think. And it's very cool that we're finally starting to see some blockchain companies bring real-world use cases to everything. All right, hopping over to number 4 then. So yeah, the Ethereum Foundation has launched, finally, public attack networks for the Ethereum 2.0 based on existing stable clients. Good, we're seeing some movement. Gosh, Ethereum's been way too quiet for way too long. Networks are designed to give security researchers a sandbox environment where they can try to break Ethereum 2.0's network by exploiting potential issues in the clients. Currently, there are two Beta 0 attack networks based on the Lighthouse and Prism clients, built respectively by Sigma Prime and Prismatic Labs. According to the announcement on Monday, they are real networks, though they present some limitations. Notably, only 4 nodes have been deployed onto the network with 128 validators versus thousands expected for the actual 2.0. So the goal is to prevent finality for 16 consecutive epochs by any means necessary. This means that the exploit will need to make Ethereum 2.0 network unusable and unsafe for at least 102 minutes, so just over an hour and a half. Pretty interesting. Individual hackers and specific groups will be entitled to a 5K bounty for successfully breaking the network in this way. Each network has its own bounty, though a single entity can only receive one. Oh yeah, gotta love bug bounties and all these things. So in recent months, progress on Ethereum's 2.0 Phase 0 has picked up. About time, with the teams recently launching the Altona network. We've talked about that previously on this channel. The attack networks are an important part of the transition as they incentivize others to find potential vulnerabilities and issues that simple testing likely would not reveal. However, other factors may temper public optimism. For example, some client developer teams seem to be lagging behind and their nodes are unable to join the shared testnets as of right now. Furthermore, the community has to decide on what makes Ethereum 2.0 ready for the mainnet, with potentially months of further waiting as systems continue being battle tested. It is a little frustrating, not gonna lie. I've talked about it a lot on this channel. I love Ethereum, and I'm frustrated by their lack of progress. So I'm very happy to see this, but I wish it was more. However, I feel like I'd say that regardless of what they announced. Alrighty. Just like that, let's hop over to number 5. CoinGecko's been caught doing some not great stuff. So they're saying that nearly 50% of OKEX's web traffic comes from Bitcoin faucets and ad sites. These platforms incentivize users to do various actions like visiting specific websites, and one of these websites lists OKEX as a partner. The headline of this is Bitcoin exchanges may be paying for web traffic. That's the clickable thing, but it seems like it's pretty much OKEX who's doing this. So yeah, CoinGecko put this out claiming that crypto exchanges might be juicing the amount of online traffic. In particular, they noticed that crypto exchange OKEX saw lower trading volumes in the second Q of 2020, but traffic was up almost 240%. Makes sense to me. So yeah, and there's all types of, look at these things. Wow, look at all this stuff we looked at and researched and went through, and burka. So yeah, it's definitely, if you look at the graphs, you can see just vertical lines of increases on them, which does not make sense. Top 5 traffic referral source are all crypto ad and faucet sites. The biggest one was Ad Bitcoin, or ADBTC, which pays people in Bitcoin to click on websites. It claims it has 78,000 active users and created 866,000 impressions on the last day for its featured websites. Others included CoinPayu, which lists OKEX as a project, Cointoply, and Adith. All 3 offer some form of crypto for clicking on advertisements, using referral links, or completing tasks like viewing a website. When asked for comment, OKEX CEO Jay Howe replied that every company in the crypto space should be focused on growth, which, I mean, yeah, but that's quite the cop-out answer if you ask me. CoinGecko also noted that Binance actually did some of this stuff too. So they reached out to Binance, and they said they'd conducted a week-long paid test of traffic but after seeing low conversion rates to new traders, it didn't have any plans to anymore. I guess that makes sense to me. You're like, well, let's see if we can attract people to our exchange using these referral sites to click on it. And then they realized, oh yeah, we're not really getting any users from this, so why would we pay money for it? Yeah, it's worth a try. But why OKEX is doing it if conversion rates are so low may have to do with this next part. So on May the 14th, crypto's biggest data metric site, CoinMarketCap, which I believe Binance actually owns, revamped its metrics, putting web traffic factor as the default ranking. This puts a much greater emphasis on the amount of traffic an exchange was seeing instead of trading volume. So for OKEX, that might be what they're trying to achieve, get listed higher on CoinMarketCap, thereby potentially getting more volumes that way, even if they don't get a lot of conversion from the paid referral sites themselves. It's a bold strategy, Cotton, and that's all I've got to say about that. So who knows what? I don't foresee any big fallout from this. It's more of an interesting think piece. If you want to pay people to visit your site, hey, good on you, but you're probably not going to get great traffic out of it. Alrighty, guys, that is the front 5 stand-up stretch. I'm not going to lie, my back is killing me. I got a lovely tweak in it, but I'm going to stand up, walk around, and then I will be right back with you, so that way we can hop into the back 5. Alrighty, I am back. Let's hop into the back 5. So, is XRP going to become a privacy coin? Probably not, but they are researching anonymity. Jesus. All right. I can't speak English. So, yeah, anonymity and data protection are important factors that are becoming increasingly important to the populations and companies of today. So, in a post on the Ripple blog, Stephanie Roos, an assistant professor at Delft University of Technology in the Netherlands, says that people think Bitcoin provides sufficient anonymity, but the reality is actually very different. Just because you don't have to enter your real name, people believe Bitcoin is very privacy preserving, but when someone keeps reusing the same information, wallet addresses, it's possible to track everything they do. If you can link that profile to a real person, then you can see all their activity. So Roos is now researching the programming of a flexible anonymity for blockchain-based payments, especially in the area of corporate transactions. Pretty interesting. The use case for it would be, you can make things private. Private blockchains are, only a limited future-proof solution because only a limited number of actors can use the system. Public blockchains with sufficiently secure anonymity features, however, can represent the future, in her opinion. I kind of get it. She's quoted as saying, you get privacy for the time you need it. If you want to have transparency later on, you can reveal the relevant cryptographic keys. So that makes sense, especially for businesses. Sometimes you're going to have to show, particularly in publicly traded companies, off things to show, you complied with regulatory stuff. You're trying to attract new investors, but at the same time, you don't want proprietary things and tactics getting out in real time to the world. Makes sense to me, and it also makes sense, for, people. Cardano's doing this with, I believe it's called Prism. They want to make it so that way you have your ID on the blockchain and you control how much other companies can see and for how long they can see it, which is pretty interesting. So, Roos herself and some of her students are engaged in in-depth research into anonymity on the XRP ledger through the Blockchain Research Initiative. The research team is working on the implementation of temporary anonymity as well as the elimination of currently existing security holes for blockchain models in complicated large-scale projects. So look at that. I'm liking this. Ripple does not get in the news enough for being innovative or doing different things, but I really like the private, not, truly private blockchain, but public blockchains with privacy features. That way, I can shield some of my transactions a bit more, but if I'm applying for a new credit card or trying to buy a house, God, if that'll ever happen, then, you can reveal that to the relevant parties, but then shut it back down a little bit later. So, I like it. I'm glad they're doing some research, and I'm very interested to see how their research will eventually be applied, not just to Ripple, but to other chains as well. But hey, in news that we just got to talk about, not really because it's particularly crazy, but just because it's trending, Whale Alert uncovers a 10.9 billion Bitcoin owned by Satoshi Nakamoto. So, this new estimate includes Bitcoin's pseudonymous founder Satoshi Nakamoto mined about 1.12 million Bitcoin, which today is worth 10.9 billion. So, Whale Alert researchers utilized Sergio Lerner's Satoshi pattern theory, which exploits very alliterative, which exploits three privacy-related flaws of version 0.01 in early Bitcoin protocol to pinpoint blocks that were likely mined by the creator. Lerner's theory argues that a single miner mined about 22,000 of the early Bitcoin blocks. And there's evidence that links the Satoshi patterns to Satoshi based on public information sources and the blockchain. After an extensive review, Whale Alert says it is now certain Satoshi was operated by the Bitcoin creator. I mean, it's pretty cool. They're saying it probably would be because these two reasons. He saw 51% attacks as the biggest threat to the growing network, and by maintaining a consistent 60% of the processing power, he could prevent these from happening while leaving enough blocks for others to mine. As more honest miners joined the network and a 51% attack became less likely, he was able to gradually scale down his mining operations. Yeah, and Satoshi also liked block times of around 10 minutes, so he could artificially control and try to keep block time around that time frame. So, like I said, nothing too crazy, but it is very interesting just from a perspective that, you know, what this guy did in the early days of Bitcoin to help make it, not just create it, but help make it what we know it to be today. You know, a lot of people have claimed to be Satoshi Nakamoto. A lot of others think that it might have been a collection of researchers who submitted it under, you know, a single name. But $10 billion worth of Bitcoin, like, where is he? Where is this guy? My honest opinion is at this point, those keys are probably long, long, long lost. But you never know. You honestly don't. We may see those coins move next week, next month, or 8 years down the road. Only time will tell. All right. But moving away from the early days of crypto to 2018 to now, Google, Facebook, and Twitter are facing a class action lawsuit, I believe, in the land down under over their crypto ad bans. So, yeah, companies are taking Google, Facebook, and Twitter to court over the banning of their crypto ads from January 30th, 2018 to the present. And it is being filed by the Sydney-based law firm JPB Liberty. The plaintiffs are claiming that their businesses have been harmed when the three social media giants all banned cryptocurrency advertising in 2018. So Australia has this Section 45 of the Competition and Consumer Act. It prohibits any arrangements, understandings, or concerted practices that have a purpose, an effect, or likely effect of substantially lessening the competition to a market. I mean, yeah, you could kind of argue this. This class action lawsuit will seek damages for the worldwide losses of crypto industry members and investors. The announcements of the crypto ad ban by respondents dropped the crypto markets by hundreds of billions of dollars. Crypto exchange volumes also dropped by 60 to 90%. I mean, yeah, makes sense to me. You can make a pretty clear argument for that. I think their struggle is going to be that to prove that Google, Facebook, and Twitter made a concerted effort or talked to each other about these bans prior to making them. But you never know. The suit currently has $600 million worth of claims, but could grow to $300 billion according to reports. And the case has been put before a senior barrister for review. Pretty interesting. You know, Google, Facebook, and Twitter have been very cautious about crypto ads, which I get because, just take a look at YouTube, which is actually owned by Google, with all those crypto live streams and crypto mid-roll ads to get people, to send Bitcoin, ADA, XRP, whatever it is to them. Those are still filtering through, even though, they're technically banned. So there's a reason why they wanted to do this, but in doing so, they may have inadvertently harmed many, many, many others who were legitimately trying to do those things. So we'll see where this goes. It's not going to be a quick process unless the barrister just throws it out immediately. Personally, I think we'll probably be talking about this in the months and years to come as it continues to develop. And I could see them potentially reversing course here soon on these crypto ad bans with significant restrictions placed on them. So, getting close to rounding things out, Binance just gave their Launchpad Project of the Year award to Kava. So they outranked 4 other nominations to win this award. According to Binance, it was pretty cutthroat, but Kava got the highest score. The other 3 nominees were Elrond, which we've talked about on channel, Band Protocol, and Cartesi. Per the official statement, Binance gauged the projects on 4 parameters: market performance and return on investment, project contribution to the Binance ecosystem and how it has influenced the same metric, staking and savings enabled on Binance.com, and the number of campaigns that gave back to the Binance community. In the past year, they've launched 8 projects on the Launchpad. Out of these, they nominated 4. So, pretty decent. During the competition, Kava scored more in staking and saving enabled on Bitcoin and the campaign strategies. Elrond gave Kava a very tough fight and secured the 2nd rank with best return on investment. So, good on them. Just some side information. Kava is popular as a DeFi for crypto platform. It is designed to offer collateralized loans. It offers us in a variety of different cryptos as a multi-asset DeFi platform and offers stablecoins, loans, and other financial services for some of the leading cryptos, including Bitcoin, XRP, BNB, and Atom. So, yeah, good for Kava. It's a nice little reward. I mean, just getting yourself on the Launchpad is a very good endorsement of your, project. But then to get an award on top of that is pretty darn good. I don't know much about Kava, but much like I've said about Elrond the last time we talked about it on the channel, I expect I'll be starting to talk about it more. This Launchpad, in my mind, gives a lot of credence and credibility to these projects, because Binance carries a lot of credibility with me right now. So, and with a lot of other people. So we'll see where this goes. But alrighty. Hopping over in this last little thing, COVID-19 continues to hamper things. So Robinhood, the Silicon Valley-based stock and cryptocurrency investing app popular among the younger generations for its gamified user-friendly interface and zero-fee trading, has decided to abort its launch in the UK indefinitely. Citing that a lot has changed in the world over the past few months, they've made the difficult decision to postpone our UK launch indefinitely. As a company, we are refocusing our efforts on strengthening our core businesses in the United States. Yeah, I mean, that stinks, that's what they're doing, but it does make sense. COVID-19 has affected a lot of things, and if they don't think they can reasonably pull it off, they shouldn't. There's nothing worse than releasing a, half-tested, shoddy product that will hamper you for a very, very long time when you can simply say, we're stepping back, we have no plans to continue, and put things on pause until the situation changes or improves. Robinhood is pretty popular. They say millennial focused, but actually would be Gen Z focused. Most millennials are in their 30s at this point, just saying. So the app has found itself in hot water after a 20-year-old customer committed suicide, reportedly after seeing a negative balance of more than $730,000 in his account. Although they've declined to share details citing privacy, he was likely trading on options and didn't realize that his negative balance was temporary. But yeah, Robinhood is a pretty popular app. I've tried it out before. A lot of my friends have used it. It works pretty well here in the United States, so I'm sad that they're postponing things in the UK, but their thought process in my mind makes sense, and I don't expect it to be truly indefinite. I expect them to wait a few months for things to calm down and stabilize a little bit, hopefully, and then restart the process. But already, that has been 10 of the trending crypto news articles for the day. Thank you for watching. Please make sure to subscribe. As always, links to everything are down in the description. Today is my anniversary. What fun. Wife and I celebrating 2 years of marital bliss. Love in the time of Corona, indeed. I am excited for us to do absolutely nothing tonight because we can't. Yeah. So, before we end things, looks like we've got a pretty green day. Everything in the top 10 is green. Some up by, wow, Bitcoin up by 2.68%. That's the most we've seen in a while. Ethereum's up by 2.7, XRP over 1%, Bitcoin by 2.89, SV 4.34, Cardano's up by 1%, Litecoin up by 0.38, Binance coin up by over 0.5%, and Crypto.com coin up by just under 2. Not too bad, not too bad. Say EOS or ChainLink dropped by about 6%. That's okay with me. Like, it pumped really crazily, so it makes sense. Yeah, no, EOS, Tether, Stellar's down by about 2%. Yeah, no, everything's looking pretty good. VeChain's still chipping in at about a 4.88% gain. So yeah, that'll do it for today. Thank you for all those who listened, and I will talk to you all soon. Have a great, awesome day.